Good morning, everyone. It is 6 o'clock, so half an hour before the market opens on January 4th, Thursday. Yeah, the past couple of days, or the first couple trading days of this year, we've been heading downwards, and we're at some pretty critical levels, at least in SPY. In the QQQ, we've already passed some critical levels, so looks like there's a lot more room to drop. But in SPY, we're hitting critical levels, and if we break those levels in the SPY as well, then it would look like that we're having at least a decent pullback of 2 to 4%. So what we want to see this morning is if there's a chance of that continuing, or if we're going to bounce up, or if we're going to pause. So let's take a look at our futures. Okay, our futures were mostly random. So this is NASDAQ is bordering on significance. So just at the edge, random, non-random in the NASDAQ to the downside. S&P is flat and the Dow is actually up. So it looks like this sector rotation that we've been seeing over the past couple of weeks is going to continue. So we want to choose our sectors very carefully when we're going long in this particular point in time. Yesterday, that was XL, or not just yesterday, over the last couple of weeks, that was XLU, P, and V. And then XLE has started to move up. So we'll want to look at that as well. Before we look at that, let's take a look at our bonds. Bonds, is this today? No, that's yesterday. Let's see if we can. Okay, so we see the pre-market, this orange line right here. So yesterday we traded between the MA200, EMA20 up to the EMA8. We're opening right at the EMA20 and MA200 again. So if we keep on testing it, then there's a chance that we'll break. So now that we're back down here at the EMA8 and MA200, well, what that really means is there's been quite a bit of volatility the last couple of days. Yesterday, that might have been caused by the FOMC minutes. And then today, we're right back where we started the day. So we'll see if it breaks down, then that is a signal that most likely in the S&P and the NASDAQ and even the Dow Jones that we're going to be dragged downwards and we'll get that pullback. Let's take a look at energies. Yeah, energies are breaking up. Here we see that we popped up above all our moving averages except for the MA90. And today we're opening above yesterday's high. So there's a lot of interest in energies right now. Energies are a commodity, so they don't necessarily follow the equities markets. They trade mostly independently. The only clue that we get is sector rotation because people will trade out of equities and into energies or equities and into bonds. So given that there is less interest or we're moving money out of the higher risk stocks, some of that money is going into staples, into healthcare, into utilities, but some of it is also going into energies. So a lot of the bullish opportunities right now are actually in XLE. It's definitely a sector that we want to pay attention to. But let's take a quick look at what our VIX is doing. Okay, and this is today, right? Yes. So our VIX is somewhat elevated from yesterday, but we're off to a elevated start. So let's see intraday. Okay. Actually, I'm a little bit more interested in QQQ. So we closed over here at 398. We're opening closer to 396 and a half. So what we want to look out for is if we break down lower, and then a few levels right here. So this flat sideways movement. And then we'll add another one over here at this 400 level. So we could put it up here at 400.4, but in day trading in particular, these round numbers like 400, 401, 400.50 in the case of these indices that have larger ranges. They're very important psychologically. So we'll add those. If we hit towards, excuse me, if we hit towards these higher levels, then we would expect, so basically if we match near the levels of yesterday's high, or where we get kind of in this middle region towards the upper end of yesterday's trading range, then we can probably expect that we'll get a rejection from there and we'll start heading lower. If we open up and we just start heading lower, then we'll see. We don't have a lot of good levels down here for many days. You see, we never traded in this range for a while. So that could start a kind of snowball effect during the day, and we'll have to watch intraday to see what levels that they bounce off of. So as of right now, the NASDAQ is looking like it still wants to move lower. But what could happen is at the open, or we move lower for a little bit, or we just start retracing. Remember, about 70% of the time, the large indices, QQQ, SPY, the IWM, they have a tendency to move towards closing a gap right at the open. So this is a little bit of a gap. It's not a huge gap. It's a baby gap, but we have a tendency to move towards filling the gap. And in today's case, that could be the VWAP, or it could be the MA200. And if it's the MA200, that's pretty much closing the entire gap. And then after that, anything could happen. It could continue, or it could bounce back down. Since we do have a purple line drawn right here, so basically towards the lows of yesterday, then there's maybe a slightly greater chance, call it like 55 to 60%, that will bounce from that one and come down, especially given that we still have a pullback downward bias inside the QQQ in particular. So we'll want to watch out for that. Yesterday, we had it in the S&P 500. We had a trap right here, 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 a trap right here. We had so many traps, a lot of volatility. So don't get suckered in. If you see these sharp moves, just be careful. Don't get suckered in, and watch these levels very carefully. So draw your own lines on the S&P if that's the one you're going to follow. If it's QQQ, you can copy my lines over here: 400.5, 400, 390.5. I'm a couple pennies off of there. 398. I would call that 0.15, and then down here at 396.5. And then if you get a sharp movement upward, just see if it gets stopped out by one of these lines or any other level that you can recognize. So for example, this would be another one, because we reacted off of that so many times yesterday. It's just so close to the other one. Generally, I think of it as a region rather than a sharp line. So you want to be careful, because we still have that volatility, the intraday volatility. We still have, well, by today, most traders should be back. Tomorrow, even more, and for sure by Monday, there's probably going to be no one left on vacation. So for now, there's still a little bit of, at least intraday, heightened volatility because of the traders still coming back into the market. And then you'll just want to watch out for those sharp movements and potential traps. I think that's gonna, let's look at our calendar. Today, we had the ADP, had jobless claims. Let's see if that had any effect at 5:30. Not really. We were already heading down. Well, let's look into SPY. Yeah, no real effect from the jobless claims, so probably nothing unexpected right there. Okay, so that's what to watch out for today. Keep an eye on energies, keep an eye on staples. Let's take a quick look at XLV. Yeah, XLV is pulling back. That was just too much, too fast. So I would really be paying attention to the upside, XLE and XLV, and to the downside, anything QQQ related. All right, so have a wonderful trading session, and I will see you in the aftermarket.